And so we believe very, very firmly that anyone can be an entrepreneur.
If you just bought and held the top 10 stocks from today and you held them for 10 years, I guarantee you'd more than double your money in the 10 years.
Wow.
Hello, everyone. Welcome again to another Wealth Within update. My name is Jim Beach of School for Startups Radio, and I am joined again back from vacation, Dale Gillham. Dale, hope you had a great vacation. Where in the world did you go? Were there hotels open? How did it look? You're in Australia. What was it like?
Yeah, well, I took off in my car rather than fly anywhere. So we jumped in my car and we drove all the way from Melbourne, all the way right up the east coast of Australia to right where the Queensland border is. So we weren't allowed to go into Queensland. They had their borders shut, so I couldn't get into the nice beaches up there. But northern New South Wales was excellent. But we did stay in lots of hotels in all the way up, and they were great. They were just sort of half empty. They were very, very, with the lockdown, a lot of people weren't travelling like we were, so, but they weren't taking a lot of bookings either, so if that makes sense, they're only having half of their rooms open. But it was quite interesting how some restaurants made you sign a register to say you were there and had a contact phone number, and just in case. Others didn't care. Some were practicing safe distancing, others weren't. So, but Australia's pretty much, I just heard on the news this morning, we're opening up in the next 2 weeks. Australia will be pretty much full steam ahead with everything, all restrictions being relaxed, except where I am, mate. In Melbourne, we've had a couple of small breakouts of 40 or 50 people in Melbourne. But outside of that, everything's going to be back to normal pretty much within 2, 3, 4 weeks in Melbourne, or in Australia, sorry. So we'll be back. So anybody wanting a holiday, come on down. But you'll need to isolate for 2 weeks before you get to have fun.
That sounds like a great vacation. All right, let's talk about the market. I saw an article this week that actually said the term irrational exuberance. I felt slightly vindicated. I hate the market being down, but it only makes sense to me that it's down. I don't know how we can keep going up when every bit of news I see is scary. What are your thoughts?
Oh, look, hot air only goes so high before it starts to cool and starts to come back down again. And, I know we were chatting about it before I went on holidays, how the market was going up. Really on hot air, it was nothing much, there was lots of rumours of speculation, but, the Dow was down 3.31 last week. The S&P was down about 2.86, I think, last week. But it was really as fears about the market was growing, because we need to understand that the market, it just can't keep going up on rumours that things are going to be okay. And we've seen all the new outbreaks across, obviously, Texas, Florida. They've had the big outbreaks there. There are other outbreaks going around the US. It's not. I don't think it's going to be a second wave, but it's getting close to being a second wave in the US, if that makes sense. You can have outbreaks and it's not a second wave, but when you get mass outbreaks right across the country, then that will be a second wave. And I think the US is not there yet, but if they don't get hold of this right now, it will be, and that'll see a lot of negativity across the market, because we got job figures out this week. On Thursday, the job figures for the US come out, and we're also, because we are in the last couple of days of June, and so those job figures will be announced on Thursday, and they'll be really, really important thing to watch for everybody, because any surprises here with the figures worse than expected. I think last month was like 2.5 million jobs created. If that's down, if we don't see at least 2.53 million jobs created, I think if it's down on those sorts of figures, then we might see the market fall even further. But I remember, I think the US Bureau of Labour Statistics was saying the unemployment rate last month was about 13.3%. So, but we have expected it to be up more like 15 to 20%. But we also need to remember all the jobs created last month were leisure, hospitality and construction, those sorts of services. So if we go back more into a lockdown, those leisure and hospitality jobs will start to shrink again. Where stuff in employment in the government continued to decline sharply last month. So, but hey, anything can happen from right here, but I think this is a nice pivotal week with the end of the second quarter. 2020, so businesses will start doing their reporting in the not too distant future. But those rising COVID-19 cases, with Florida and Texas reversing their reopening measures, that worries me at the moment. But I think the market's going to go down anyway. That's what I've been thinking. How far, how deep, how long it will be, that's the conjecture I've got. We could be going, I know there's been a lot of talk about a V-shaped recovery, but I'm thinking we might even get into what they call a W-shaped recovery, where, drops away, comes back, drops away, comes back, drops away. So it's more of a sideways move. But only time will tell.
Right. Well, the bars and restaurants reclosing across the South, especially in Texas, Florida, is very, I think, indicative of the W recovery, or just simply, I hate to say this, it could just be a bumpy J curve too, couldn't it?
Well, it could be. The thing is anything's possible, and right now the market is running on, how do I say it? The psychology of the market is fearful, so it's not highly positive. And when you get fearful, you get irrational behavior, and irrational behavior, it's very, very, very hard to predict. So therefore you might get jumps some days, falls the next days, and we've seen that in the last week. I know the last four days of last week, I think we've closed, or the last 3 weeks, the market's closed lower twice, higher once. But if we look at it, it's all over the place. We get big jumps and then falls away over consecutive days. So that shows you the market doesn't know direction at the moment, and it's uncertain of what the direction is. I'm still pegging it down because markets tend to fall in elevators and go up in stairs, and we've had a couple of weeks down. I think the Dow's still off. It's about 9% off the high that it had, I think was the 9th of June, was the most recent high, and it's down around 9%. I think there's further to go at this point in time, but if it's short, the fall in time and price, if we don't fall too much more, maybe 10 to 15% over another week or so, and then start to move up, I think the good second half of the year. But I think it's going to be longer and deeper than what most people expect. But we also need to remember the markets are closed on Friday with the 4th of July celebrations. This is my birthday month. I was born on the 14th, so all presents gratefully accepted, as long as they're COVID-19 free.
Well, early happy birthday to you. I will get you something in the mail made with my own clean hands. All right. So, or maybe I'll buy you some FANG stocks. That would be a really nice gift. The FANG stocks up 45, 37, 25%, whereas the market's down 12%. I know enough about averages to know that if you show me 5 that are up, and the average is a negative 12, there's got to be a whole lot of negative on the other side.
Yeah, I mean, if you look at the Dow Jones, it's 3 or 4 stocks are in green for the year. So, I mean, Apple and Microsoft, Visa and Home Depot, the only 4 stocks in the Dow that are in the green for the calendar year so far. But why I wanted to talk a bit about the FANG stocks is because they're the ones driving the market, and I really wanted to highlight this. A lot of people think if the market's going up, then all stocks are rising, whereas when you look at the FANG stocks in the S&P 500, they're making up over 20% of the whole S&P 500. And if you look at the top 10 stocks, it's even bigger than that. But when you got things like Amazon up 45, Netflix up 37, Apple still up 20% for the calendar year. Facebook and Google are the worst performers in the FANG stocks. They're up. Facebook's about 5% and Google just under 2%. But when you see the market's down, and the Dow is down over 12% for the calendar year, and the S&P 6.86, but flip side of that is the NASDAQ composite is up to 8.74. So you're seeing technology is really driving the market at the moment, and obviously those big technology stocks are driving that market, and that's really what I'm saying. If those stocks start to fall away, then the market's going to fall away, because it is a bit top heavy in that respect in technology stocks. This is unusual because, 50, 60, 100 years ago when we had pullbacks on the market, you didn't have technology in those indexes or high up in those indexes. So it'd be interesting to see what happens over the next few weeks with some of those stocks. But Hey, again, I still really do think the market is falling away, and if the top 10 stocks in the S&P 500 make up quarter of the S&P 500, they're the ones going to start dragging it down. So that could be an indicator if Microsoft and Apple and those stocks start to fall away.
What about the impact of Starbucks, Coca-Cola announcing that they're pulling all social media ads? If we had that kind of news and that continues, and throw in some bad jobs figures on Thursday, we have the recipe for a really bad week.
Oh, absolutely. I still don't discount that the March lows will be tested and possibly broken. And I know there's a lot of people over the last sort of 8 weeks have been calling me crazy, you're saying the market's going to fall, it's going to fall below the March low, and they're saying you're getting it wrong, Dale. But markets always bounce, but they always retest lows. And whilst the pendulum swung to being more positive, a month ago, the market was looking good outside the last 3 weeks. The pendulum was swinging to be more bullish, but it doesn't mean it's going to stay there. And as we get more news, etc., coming out, then market conditions do change, and they're ripe right now for another big fall very, very quickly. So I'm not discounting it, but I'm not saying it's going to happen at this point in time. All I'm saying is it doesn't matter what happens on the market. The important point that investors and traders need to know is how are you going to handle that? If you're in the market right now, are you going to exit if it falls away? Are you going to buy more? What are you going to do? What are the strategies you're going to use to protect your capital? Because it really doesn't matter what the market's going to do. You can still make money, and that's the important thing that I want to share with people is I don't necessarily worry too much about direction of the market. I'm just looking at the stocks I own or I'm looking to own.
Very good advice. Dale, we need to wrap it up for the week. What are your final comments, final thoughts? What should I look for this week?
Look, I think I can wrap up the market in 3 words for next week. Down, down, down.
All right. Well, that's a big positive news to leave on. Dale, we hope not, but I'm not going to discount your thoughts. You are probably right. We can find more about Dale at wealthwithin.us. Always check out his book, Accelerate Your Wealth. And Dale, we will talk to you next week. Go unpack your luggage.
Thanks, mate. You take care, and I'll talk to you soon.
Have a good day, everybody, and we hope the market's up, but be careful. We'll be back next week. Take care, everyone.
Please remember that this report is an educational tool. While Wealth Within holds an Australian financial services license, the information featured in this program is general in nature and therefore should not be relied upon. Before making any investment decisions, you should consult a licensed professional who can advise whether your investment decisions are appropriate for you. We hope that you enjoy this week's report.
Well, as you heard from Jim and I'm a bit negative on the market at the moment. I think he is as well, because I think the Dow and the S&P are really sort of been going up on a lot of speculation rather than solid fundamentals, and there's a lot of manipulation going on in the marketplace with the mood of the market is quite interesting at the moment. It really does pay to listen to the mood of the market, and that's why we're getting lots of indecision. You're getting lack of direction at different times. You're getting spikes up and spikes down. So I do expect the Dow to fall this week. There's no reason why it will rise up. Obviously, we've got 4 days of trading, with Friday being 4th of July, the 4th of July celebration. So we are, as I said, I am expecting the market to fall away this week. But hey, stranger things have happened. It could just turn around and rise up, because we've seen that over the last couple of weeks. It's fallen heavily one day and gone back up the next day. So it is really confusing investors and traders alike. So at the moment, when the market's a little bit uncertain, it pays just to pull back and sit there and let everybody else take on the risk rather than yourself. But let's go and have a look at the chart and see what's going on there. So looking at the Dow, we can see here that this last big monthly or weekly bar up into the week ending the 5th of June, where the Dow hit 27,338, and since then it's just reversed. The week later, which is the week ending the 12th of June, gapped up, traded up, and it spent the rest of the week going down. So we've had a down week, where it closed lower. This week it was down, it traded lower, down to that low there of 24,843. So it is technically a down week, even though it closed higher. So the close there, you can see 25,871 was higher than the previous one at 25,605. So it really is one of those things you need to be careful of watching, looking at saying, well, the Dow was up 3% this week or 2% this week, looking at the close being higher than the previous week, but it was actually technically a down week. Last weekend, in the week ending the 26th of June with Friday's close, we can look at that in a second. You can see it opened up here where it closed the week before, tried to push up, and then the bears came back in, seeing it close right on its low. Now this would suggest to me that the Dow will start to fall away again this week, and it should be a down week, so it will probably make a lower low. But interesting, we need to see this downward move being short in time and short in price if the market is going to be bullish. And what I mean by that is we've already seen 1, 2, 3 weeks. If we see a fourth week down, that's okay, but I think the market needs to find some support and start to move up again to start proving it's more bullish. If we get some support somewhere around about this sort of 24,000 point mark and it starts to rise, then we would see the market probably move through this previous high. But again, that's going to rely on lots of good figures coming out for the second quarter earnings throughout there for a lot of those companies. It's also going to get good jobs figures. We need those sorts of things to come out to support the rise. If the job figures is bad and we're starting to get more lockdowns happening and we're getting companies putting out earnings reports that are surprising the market or under where they should be or whether the market thinks they should be, then we're going to see a massive fall, because it really is possible that that low back in March will get challenged. There is still a possibility. It may be slightly smaller than what it was a month ago, but it's still there. And we always need to be cognizant of the fact that, yes, we might have some stocks in the marketplace, but look at the stocks, not the market. If the stocks that you own start falling away, then you have an exit strategy on them. It doesn't matter what the market's doing, whether it's going up or down. That's what I was saying to Jim. Doesn't mean it doesn't matter as long as I'm in it when it's rising and I'm out of it when it's falling. That's pretty much as simple as you need to keep it. So right now, just be careful. Don't get into the market or don't start buying a lot more stocks. Don't catch falling knives. Don't try and pick bottoms of stocks. Just wait for the market to see where it's going, where it's got some nice direction. So wait for some support for starting to move up again before buying. As it's falling away, just exit stocks. That's pretty much what you should be doing and putting your stop losses. If you're not sure how to set stop losses, get my book, Accelerate Your Wealth. It's your money, your it's not, sorry, I could say my own book name. Accelerate Your Wealth, it's your money, your choice. So just get into book stop shops throughout the US or on Amazon. You can get my book over there as well. So it'll tell you how to set up your portfolio, buy, sell, set up stop losses and really protect your capital and make some good money. But I don't have any questions for today, but what I was going to do is go through those FANG stocks that I was talking about with Jim. So I'm going to show you those FANG stocks and what I think of the FANG stocks. So let's get into those charts right now. Okay, so the first one we're going to have a look at today is Facebook, and you can see here Facebook made a new all-time high this month. So its new all-time high is $245.19, but then, you know, it makes money from selling its data and obviously from advertising as well. So if social media advertising is going to be pulled back, then we might see a bit of a fall on here. But let's go and have a look at the weekly chart. And as you saw in my figures, Facebook over a year, the calendar year, hasn't risen that much. And we can see a big reversal down here on Facebook. So I would expect it to continue to fall away, probably get down to at least 200, maybe even a little bit lower than that. So this could be an opportunity to pick up a good stock. But if we start seeing these FANG stocks falling away, they will start taking the market with them. So it'd be interesting to see what Facebook does. Also, it will be interesting to see when their earnings report comes out, what their expectations are. Right now, we're not getting a lot of hints, but you can see here how Facebook back in July 2018 was $218, and right now it's $216. That was the close last Friday. So really anybody that's held this over the last couple of years hasn't done very, very well on this stock, other than maybe collecting some dividends. But it is a bit overdue for another nice big bull run, but we need to see a pullback here to settle down. But right now, stay out of Facebook, but just watch it for a little bit. Apple's another one of those great stocks, and again, it's hit a new all-time high, and you can see here this month, the all-time high is 372. What worries me, it's quite vertical rise. You can see the angle of that rise, and well, let's look at this week, and I'll just set this out. is stocks rise on momentum, and look at this bar here. It opened up last week, pushed right up to the new all-time high and came right back. I would suggest Apple's going to fall away this week based on what I'm seeing, and if I'd used a trend line, you can see what I'm talking about as far as angles. You can see that angle that the stock's been going on, whereas the current angle is a hell of a lot more steeper. That angle there is very much steeper there, and so anything that goes up fast will generally come down again. It normally starts to signal the end of a long bull run, and the more that starts to move up, etc., the higher the probability that move will end. And right now I think Apple's overdue for a bit of a pullback. The least amount of pullback. So what we want to see is not too many weeks falling away and too much in price for this stock to remain bullish. But it wouldn't surprise me if Apple came down sort of around that $300 mark, possibly even lower at this point in time. But it has been such a beautiful stock, and this could be one of those stocks. These FANG stocks, as I said, if they start falling, they will start taking the market with them. Amazon, similar, very, very similar story. Made a new all-time high this month, and with Apple have done very, very well throughout this calendar year, along with Microsoft, which is not a FANG stock. But you're seeing this big move up. Again, very indecisive here for last week. Tried to push up, made a new all-time high, came right back. And again, you can see the angle of this one a lot sharper than what it was through here. So again, Amazon could be starting to fall away through here. And you'd see there's some pretty good support around 2,300, round about that 2,200 to 2,300. I would suggest if it falls below that, then there's going to be a lot further falls on the stock. But if the fall is short in weeks and price, then it could be some good buys coming up in a few months. So I'm not discounting the market will be bullish, but right now I think we're going to get a bit of an easing of the market and then a move up. Netflix, another one. It's been doing very, very well during COVID-19. And again, you can see a new all-time high on this stock. The stock price here is 474 it hit. But let's have a look at this week, looking a little bit closer. Again, another one. It pushed right up and retraced. A bit more sideways over the last month. And again, a nice big move up here. But the angle of this stock, if we go and show you again, the angle of the momentum of this stock is more around there. So what you'll see is the stock will move up and around its normal momentum and its trading pattern. So it's been a little bit rampant here, and this is what Jim was sort of talking about. We get rampant speculation, and we've had a lot of speculation during COVID-19 with the meltdown into March and then the rise up. Generally, you get speculators and the retail investors speculating on the market near the end of the market. So it wouldn't surprise me if the market does start to fall away. Last one I want to talk about is Google, but this one's a little bit different. It didn't make a new all-time high this month. Its high this month is 1475. Its all-time high is back there in February, so it's fallen away, but a little bit more sustainable. I think Google, you can see the angle of that, far more sustainable, and Google had this huge big hit back into March, a very, very big hit, but almost retraced all of it. Last week, very, very bearish bar, so I'm expecting this to retrace. Looking at all these stocks, I think Google's probably the better one. I think it will retrace a little bit further. We might see it drop down to sort of about 12 to 1400 or 1200, 1300 here. If it does do that and finds some support and starts to move up, I think Google could be a good buy for the second half of this year. But right now, there's about 3 or 4 of these stocks in the FANG stocks that are concerning me that they will start to fall away. And as I said, to me, the trick is if they don't fall away for too long in time, meaning only falling away for 2-3 weeks, and they don't fall hugely in price, if under 15%, the better. Or if they're under 20%, that's not too bad, but less than 15% is even better. If they start falling 15 to 20%, if they go through 20%, then they're likely to do a hell of a lot more. So if you do have these stocks, just make sure you've got some stop losses in them. If you don't know how to understand it or apply stop losses, how about you go and buy my book at the bookstores, as I mentioned a little bit earlier. That's it for me. If you've got questions on the US stocks, this is a US report, so all you Aussies watching it, US stocks on here or questions about the US market, happy to answer those. If you're from anywhere else in the world other than Australia, please tell me where you're from. I had a lady that told me she was from the US last week in the comments, so hope you're watching this week, and I really thank you very much for supporting this channel and these reports. I do like it to hear where you're from. It really helps me understand who our viewers are, and tell me a little bit about yourself. Happy to help you out a little bit if you've got some questions, so stick them down below. But that's it for me. I'm Dale Gillham, the Chief Analyst here at Wealth Within. Goodbye, good luck, and good trading.